What is going on, investors? Hopefully you guys are doing well out there. Happy Friday. Happy Thanksgiving. Hopefully you've all had a great last couple of days. Today, we are going to take a look at the FAANG stocks and Microsoft and Tesla like we do every Friday. I'll run you through the news. Be honest with you, there's a lot of news this week. And then finally, we'll jump over to the stock charts. Probably a little less news unless you're talking about maybe Tesla with this, but all the other news, again, we had kind of a holiday week. We had a trading day today on Friday. So, it's one of those weeks where a lot of the professional traders kind of take the week off, and maybe going into next week, you might see some light trading. We'll see what materializes, but let's start it off with Facebook like we always do. Started the week right about 271, just up slightly up to about 278. A lot of news actually out of Facebook, and actually related to Google and Amazon and some of these other ones. France is going through with a digital service tax. So they're going to tax, it looks like 3% tax on digital service revenues. This is only in France and only related to these big gigantic companies that are doing 25 million euro or even larger than that, 750 million euro worldwide. So it looks like these companies are going to have to pay a 3% tax. Guess what, guys? Chances are they'll figure out a way to either raise the price in France or figure out a way to get around this. There's always loopholes, and this is likely not going to be super material to these guys' business. Interesting note out of Facebook this week. It looks like the Libra, which is like their cryptocurrency or their digital coin, looks like it was shaky there for a while. Looked like it was totally gone, but looks like it might be making a comeback or making a debut here in January, which would be interesting with Facebook. Obviously, you could pay on the platform with this digital currency. You could also be rewarded somehow. Like, we talked about last week, Facebook is reportedly maybe paying Instagram influencers and maybe other influencers across their platform. Well, they could be paid out in this Libra coin, which looks like it's going to be backed by the United States dollar, which makes it, another dollar, but we'll see how that materializes. This will be interesting. I certainly wouldn't mind getting my hands on a couple of them, at least right in the beginning, because these things tend to go up, especially if it's backed by Facebook. Then finally, the UK looks like they're curbing Google and Facebook dominance with tougher rules. I would actually expect this heading into the next couple of years, not just in the UK, France, other places around the world, but also the United States. When you have divided government, like we more than likely will have, it's not for certain, but there's a good chance we'll have divided government here in the United States. Well, guess what they do? I think I saw a stat, 90% of the congressmen and women and senators in the United States Senate, I think like 90% of them were lawyers. And so guess what they're going to do? They're going to crack down and do all kinds of like investigation and laws and regulations. And so expect that over the next couple of years. Now, will it really impact Google and Facebook? I actually don't think so. I think what these tougher rules, what they end up doing is actually hurting the startup competition, because guess how Google and Facebook got upstart and got big? Basically because they didn't have to abide by many rules, where if you put rules in place for Facebook and Google, guess what? The little guys have to follow them too, or they'll be hindered by them as well. So I would expect that going forward. And ultimately, these types of things tend to make the rich richer, which in this case happen to be Google and Facebook. So if you're investors in them, probably not a bad thing. So moving on, Apple started the week 118, kind of just went sideways, finished the week right at 116, 117. Not a whole lot going on in Apple. Some interesting notes here. This is not too far from me, so I kind of know like the struggles. If you want to exercise your Second Amendment in the Santa Clara County, in the San Francisco area, it is incredibly difficult. And what it appears, again, this is allegedly, but it certainly wouldn't surprise me if this was 100% true, was it looked like a security chief at Apple donated 200 iPads to a sheriff office to get 4 concealed carry permits, just 4 of them. Okay. So, just incredibly interesting story here. Probably says more about the firearm laws in this area than it does what's going on at Apple. Apple. We'll see what happens here, but just kind of looks bad. It's kind of a bad look for Apple. Obviously a bad look for the sheriff's office too, whether it's true or not, just kind of a bad look. Now, Apple also is asking Foxconn to shift some iPad and MacBook production to Vietnam. This will be the first time iPads are made outside of China. So interesting. Some of this is tariff related, U.S. trade tension related, but it's also probably a little bit Apple just kind of diversifying their supply chain as well. Interesting stuff here. We'll see, how many of them get shifted, but, a more diverse supply chain certainly would be beneficial to Apple, because not only with these trade tension, but we also saw with the virus, it impacted supply chain. So the broader you can spread that out, if you're Apple's probably the better thing to do. Amazon had a great week, started at about 3,100 or so, ended the week at about 3,200. Not a huge move when you're talking about how big and the stock is, but a lot of attention on Amazon, obviously with it being Black Friday and we're headed into Cyber Monday next week. They went on a historic, this is Amazon, a historic hiring spree. They averaged an average of 1,400 workers per day for 14 months. Now they have nearly 500,000 employees, and a professor or a historian said no American company has hired so many workers so quickly. So Amazon is becoming a very, very large employer. And now here's just a side note. What I've heard is Jeff Bezos's plan is to hire all these workers, pay them kind of above average rates, but then invest heavily into robots and technology, which would actually impact his company, would give his company a very big competitive advantage. So he's driving up cost of employee. So, you can go work for Amazon for above average minimum wage, which would maybe make a job at Target or Walmart or one of Amazon's competitors, or maybe a small business, harder to do, because you could just go work for Amazon. And then eventually Jeff Bezos is going to flip a switch and say, nope, I'm going to have a lot of robots doing things in the future, and then eventually have a competitive advantage. We'll see if that materializes. I actually think that's probably true. Whether or not that's a nice thing to do, I don't know. But as a shareholder, as Amazon, hey, sometimes you don't always have to play by all the rules. Amazon announced a one-time bonuses for holiday workers that will cost $500 million. So they are taking care of them. Like I said, they raised the workers' pay by earlier in the year by $2 per hour. They gave out bonuses earlier in the year. It looks like if you work for the entire month of December full-time, you'll get a $300 bonus, and you'll get $150 for part-time workers. Again, it is tough for the small businesses of America to compete with this. So if you're trying to hire, I'm hiring signs everywhere I go in my town. I don't want to say everybody's hiring, but I see a ton of hiring signs. Well, it's tough to compete when Amazon is paying above minimum wage, and then they're also giving these bonuses. It's tough. So Amazon is squeezing the neck of its competitors in more ways than one, and one of it is by employment. So we'll see how that materializes. Another interesting note here, and this is something that has me very bullish on Amazon, is that U.S. net digital ad revenues at Amazon from 2018 to into 2021 obviously being a projection. We're growing at a nice clip here. In fact, it's accelerating. We're expected to accelerate close to 10% next year. And so that is really strong. That is a total percentage of digital ad spending. So Amazon is taking market share. They're not only grabbing market share that's from the increasing pie of digital ads, but I believe they're also probably taking some of that from probably a little bit from Google, probably a small amount from Facebook. Probably not negligible or accountable to those companies, but Amazon is becoming a very, very large player, obviously getting up into that $16 billion mark into next year. I would consider this one of the more bullish signs to be bullish. Amazon is their ad business. Netflix, not a lot out of Netflix this week in terms of news. 485 to beginning of the week, 491 at the end of the week. When we jump into the stock price, we'll take a look more there. Google started the week at 1756, end of the week, dancing at the top of the range. When we get to the stock chart, we'll talk about how Google was at the top of this range. And we talked about it on last show. Like, the more it kind of dances up there, probably the better. So Google's facing some antitrust. I talked about this in the beginning with Facebook. Just expect, lots and lots of this to happen over the next 12 to 24 24 months, 36 months, even 48 months with Google. When you have divided government, what do they tend to do? They tend to just go after the money, okay? And Google has lots of money. This is a bipartisan group of AGs, or, and we'll see what happens with these states. We'll see, what happens with Google. I think more than likely we'll see fines. They're not coming after Google to split it up. They're not coming after Google to put it out of business. They're just coming after it for some money, and likely Google will have to pay over some money. It'll probably be, I would guess, at the end of it, probably in the billions of dollars, but likely not that big of a deal. DOJ, Google and Fitbit. Man, this acquisition happened a long time ago, but it has not been approved, and the U.S. is not expected to weigh in until after Europe does. So don't expect the Google and Fitbit merger to combine anytime soon. If for whatever reason you still own Fitbit shares, probably a little bit of risk there, because if this deal falls through either on the Europe side or the United States side, those shares would come crashing down. So we'll see what happens there. Microsoft, big week, obviously, with their Xbox launching, but kind of flat for the stock. Started the week at about 212, finished at 215. Not a lot of news, to be honest with you, out of Microsoft. Tesla was easily the best performer. Huge performance, actually, for Tesla. Started the week at 493, ended the week at 585, added almost $100 to the stock price. That is absolutely sensational. Tesla has just been riding the wave of when they got announced that they were going to be in the S&P 500, and just the EV space in general has just been really, really hot. It's probably the sexiest investment on the street at the current moment. So Tesla blew past a $500 billion market cap, which means it's larger than Toyota, General Motors, Ford, Nissan, and Honda combined. So all those companies combined, Tesla is worth more than that. So we'll see if Tesla is able to maintain this type of valuation. Obviously, it relies heavily on them continuing their momentum with their electronic vehicles, and also their more affordable vehicles. I think is probably even more so the case, because there's only a certain segment that can afford those $100,000 cars. Those $25,000, $30,000 cars is where the growth is likely to come. Now, jumping over the stock chart, here is a Facebook. Not a whole lot, to be honest with you. We are right in the middle of kind of this box that we have here. We have we'll call it 260 up into 285. We're kind of right smack dab in the middle of this one. We're in the middle of this channel. The stock has kind of danced around in here. Will this stock, and this is kind of a recurring theme when we're looking at the stock chart, will it break above 285? That is the key level for Facebook. Break above 285 and hold and kind of dance up here, kind of like Google, would be a bullish sign. Maybe we can come and retest these highs closer to 300. Anything that, any push up to 285 and hard rejection back down to 270 or 260 obviously is bearish, and I probably would look to be adding shares probably in this lower range, 260 to 270, but even more so 250 up to 260 would be even more compelling with Facebook. Apple, almost identical situation, just in the middle of a trading range, 110 to 120. We have not been able to pop our head above 120. When we did a few weeks ago, it got rejected and came back down. So we'll see what happens. If Apple is be able to pop its head over 120, can it continue that momentum? There's two stops on the train here. The first stop is probably 125. If it can bust up over 125, those all-time highs are probably possible. We've seen this with Google and Tesla. They've been able to pop up and above their all-time highs. Facebook, Apple, Amazon, Netflix, they have not. So it could be a sign of things to come that these stocks will eventually do that. When that happens, I'm not exactly sure. Let's take a look at Amazon. This chart looks almost identical to Apple. We had this pump fake here and the stock got rejected. So we have two levels that Amazon's going to have to push through to get back to the all-time highs, which are 3,555 and some change. So it's going to have to push through this 3,450 level as well. Again, we kind of have this mapped out right right around 3,300. Stock's going to have to get to that level, push through it, and then I think it's going to have some tough treading up and above this range. What can get Amazon up above this range? Obviously a fantastic quarter. We're probably still several weeks away, probably even like closer to 2 months away from Amazon earnings, which should be great considering the backdrop. But another thing could be, which a lot of people have talked about, but it obviously is more or less a rumor, but any kind of stock split with Amazon would help break this stock up a little bit, make it a little bit more affordable. When you're talking about a $3,000 stock, even with fractional shares, it's difficult to jump in on that one. Netflix, again, right in the middle of the range. We're kind of looking for this one to see if it can come back up to the 506, 507 range. Anytime it's popped up above there, you can sell. Okay, we have 1, 2, 3 times that is popped up here. This one even lower. So we're kind of making some lower lows here. If Netflix were to sell off, it could come back down here into the 470s, 469 range. That would be an interesting spot in my opinion, because it has held that level several times. But we are in now what I would call probably a shorter term downtrend with this one. It's kind of looks like it wants to make one of those kind of looks here, because you have a high here, lower high, coming down here, lower. It's peaked up here. It's not like a really defined one, but we'll see what happens with Netflix. I'm looking, I would look to sell above 508. I would look to buy at below 470 or so. Google is doing what if you're a holder of Facebook, Apple, Amazon, Netflix, any of these stocks, Microsoft as well, you're hoping that it does what Google does. It gapped, and now it's dancing up here. Would I want to accumulate the stock up at this range? Probably not necessarily, but it's definitely up here in this elevated range. The longer it consolidates up in this range, probably the better for Google shareholders, because it could pull forward the next quarter and likely some reopening and kind of more advertising and stuff like that. Any kind of really big negative news, whether it's from the regulatory front or something like that, I probably would be a buyer of Google. I think the first stop I'd be interested in is 1660. Further down below that, more attractive, probably 1575 on Google. Microsoft is very close to testing this kind of upper trend line that we have in here. Let's see if this is in there pretty good. I think we could put it right about there. So right here at 217 will be a resistance point for Microsoft. And you see the last 2 times, in fact, 3 times that it popped its head over this 217 mark, it got rejected. So that's what I would be looking for with Microsoft. You're looking to, maybe you're trading Microsoft, any kind of pop above 217, I would look to, potentially sell or put a trailing stop in there. So if this stock gets rejected, it then comes back down here. If it comes hard, you could see back down into the 200s, maybe 205s. This is where I personally would like to buy this stock, 200 to 205. Any broader market seller, bigger sell-off, into below 200 would even be more attractive, but I think more realistically, anywhere in this 200, 205 range would be a nice spot to pick up Microsoft if it gets rejected here at 217. Now, the other scenario is it could pop its head up here and then finally break above. I'd call it about 225. That would put these all-time highs, which are 235-ish. Those would put those back in play. Any break above 235 would be off to the races, in my opinion, with Microsoft. Tesla, finally, boy, this chart looks great. I mean, take a look at this, especially if you happen to buy it like I did a few weeks ago, down closer to 400 per share. And so this one, Tesla did exactly what you're hoping for with Facebook, Apple, Amazon, Netflix, and Microsoft. Take a look. Once it broke above, take a look. Here were all-time highs here at 500. This is why technical analysis, why it's not a perfect predictor, does give you kind of some odds enhancing. So as Tesla came up here, notice it hesitated for 2 days right here, right at the all-time highs. And then, but once it popped above here, boy, it was off to the races. I mean, we went from 500 up to close to 600 in like 3 or 4 trading days. So that's how powerful momentum can be. So that's why we take a look at these key levels now with Tesla. I mean, if you want to step in here and buy it up at these ranges, I don't know. I don't necessarily think I would do that. This one should come back down to earth at some point. Where it settles down, I don't know. You'd actually like to see it kind of wave out like Google, give you a little bit better chance. But notice that these stocks, when they wave, okay, notice Tesla is doing the wave. All these other stocks did this wave, okay? This is why I actually really like it when stocks I like start waving out, because what happens is typically it kind of weeds out all kind of the weak hands, and then eventually you catch a bid, especially on stronger stock. Weak stocks, undercovered stocks, this is not necessarily the case. But with Tesla, it created I mean, you can see this trend right here was intact, and then once it kind of broke up above and momentum got behind it, boy, it was like a Tesla taking off from a stoplight at full speed. So that's what happened with this one. I actually would anticipate Facebook, Apple, Amazon, Netflix, Microsoft, them all to follow suit at some point. When that is, who knows? Okay, it could literally be next week. It could be next year. Okay, those are the types of things that you need to be, kind of keeping an eye on. But this is a great example of how when a stock breaks above a key technical level, it just tends to just keep running. And so whether or not it's a great time to buy, I actually would argue probably not. It's probably not a great time to buy Tesla up at these levels, because you see the last time it had, take a look. I mean, this stock had a great run back here, peaked out, and then retraced almost the whole way. And so I would actually expect this stock at some point probably to come back down here, retest the highs that we made back here right at 500. That could be an interesting spot. I don't think I would step in here at 590, 600. I think I'd wait and hope for a pullback back into the 500 range. That would be the first time I'd want to step in with Tesla. There you go. Hopefully you guys have a great weekend. Hopefully you enjoyed this one. We'll be back with more videos, certainly more in the coming weeks as we kind of move through these holiday times. It's a little bit of a slow time for stocks, but we'll be back with more videos. Thanks for everyone tuning in. Have a great weekend. Good luck with your investments.